Welcome to the Real Estate Guys radio program. When is the right time to start real estate investing? Well, most of us wish we had started sooner. Today, we're going to talk about the next generation of real estate investors. So whether you are a young person or know a young person, you're going to want to listen in today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, it's our co-host and financial strategist, Russell Gray.
Hey, Robert.
You know, if you hang around the Real Estate Guys, pretty soon you'll meet some extraordinary young people. For whatever reason, there are a lot of young folks that come out to our events and are thirsty for real estate knowledge, and we're so excited about that. We have big hearts for youth, and we both started at a pretty young age in real estate investing and are quite thankful. If you talk to most successful real estate investors, they almost all say they wish they had started early. I wish I hadn't waited till I was fill in the blank to begin investing in real estate. So today we're going to talk about the next generation of real estate investors and how can we position young people for success in real estate.
I think real estate naturally attracts people of all walks of life because they inherently understand the business model. It's not complicated. You know, you look at stocks, you look at people on TV talking about what's going on in financial markets and making investment decisions, and it's enough to make you want to throw up your hands and just turn your money over to a quote unquote professional money manager and invest and forget. And of course, we understand that that sometimes doesn't end well, but it's really disempowering. And I think young people, as they're stepping into their adulthood, are really largely about empowerment. They want to explore their capabilities. They want to learn. They've been in an environment where it's been all learning, high school, college. They're being prepared for adulthood, and they get out there and they've got a credit score. They get a job. They get some income, and they start looking around. You know, once they've kind of gotten the wild oats out of the way, you know, the things that you do early in life when you get that nice car, you get your first nice apartment, you buy some nice things, and you start to feel like, okay, I'm actually a grown-up now and I'm carrying my own weight. Then you start looking around and start thinking about, okay, how do I get off of this treadmill? How do I build some real wealth? So it's beyond just buying your first home, although that's a great place to start. There are a lot of young people who don't start there. They start out with their first investment property for a lot of reasons, which we can discuss. But it is something, I took my first real estate class, you know, when I was in high school. I saw my parents getting their real estate licenses. They had hit that spot that people hit in their careers. You know, they're 15 years into their adult life and they're like, there's got to be something more than this. And they look to make their fortune and they step into real estate. I saw that and said, well, why do I want to wait till I'm in my 30s to do that? I'm going to do that in my teens.
Well, I think that is exactly the point, is real estate doesn't necessarily interest everybody. The folks that come out to our events, yes, it does. But there are folks, and so this show is not aimed at young people. It's not aimed at older people that have young people in their lives. It's kind of an open discussion about handing the torch to the next generation. And the last thing you want to do is to leave an unprepared legacy. So a lot of times we end up dealing with folks who have amassed a big fortune in real estate, and then they have to figure out how to give it to their kids, and their kids either don't want any part of it, don't understand it, or can't be bothered. And so I remember talking to a guy who was just heartbroken because neither of his kids wanted to pick up the mantle and become the real estate investor in the family. And he knew that as soon as he passed away, even though he'd spent a lifetime building up an awesome portfolio, performing well, great markets, great properties, great third-party management, He knew as soon as he passed away, his kids were going to sell everything and take the money. And that just didn't set well with him. So I think whichever side you're on, if you're a young person realizing that there's opportunity in real estate today, or if you have young people in your life that feel that way or haven't yet got the bug, well, this is the show for you. Real estate is arguably the best wealth creation device there is. And we don't have to make that case probably to people listening to this show, but it was like that when we were young. It was like that when you were young. And it's like that today if you're young. That the idea of other people getting up and going to work, not managed by you, sending a big chunk of their paycheck so that you can pay the mortgage payment and the property taxes and the utilities and have profit besides is an awesome thing. And the more people that you have whose lives you are affecting positively by providing a clean, safe, affordable place to live, the more money you make, the richer you get, the better tax deductions you have, the more net worth you have. It's all good. There's very little downside. You have to go through the troubles and turmoil of any kind of business, but once you get that figured out, real estate is awesome. So how do you get folks interested and involved early on? That's really, I think, the spirit of this conversation. As you mentioned, Russ, we run into people that have figured it out. How do I get this? But I think we also run into people who either have or know kids that can't be bothered. Like they're at that stage you talked about. They've got their apartment, they've got their car, they're making some money. And rather than think about saving it or investing it, they're out blowing it.
Well, I think if you're listening to this, whether you're young or old, and if you're old, maybe you have some young people in your life. I've been both. Obviously, I'm more on the older side of things now. I have grown children and grandchildren. But I think fundamentally, the biggest mistake that people make of all walks is they think real estate is about going from cash to asset to cash. They think of it as a tool to flip. They think of it in terms of capital gains and equity. And hey, we wrote Equity Happens. I mean, we're all about that. But a lot of folks don't really understand. I mean, I talk to a lot of sophisticated investors, and they still don't really understand where equity comes from. And equity is a byproduct of cash flow, right? So there's two types of equity. There's fake equity that comes from speculative bubbles when people see interest rates go down, and especially in residential 1 to 4, where your personal income can offset some of the lack of income on the property, and you can overbid the property. And that's where you see some of this. And there's a lot of that potentially going on in housing right now. Houses are selling at prices where they couldn't possibly rent to cover. People are buying it because the properties are going up and they're making the equity. And people who are flipping properties are about buying a property that doesn't cash flow at all and investing cash and then flipping it and coming out on the back end. So if you've spent your lifetime building up a stream of income, which is really what true wealth is, and your heirs or whoever sees it not as a stream of cash flow, they're not focused on the cash flow. They see it as a pile of cash that can be spent to buy goodies, to buy things, to buy bling, to speculate on Wall Street bets and buy GameStop stock and Bitcoin and hope to, hit the big payday, buy lottery tickets, whatever it is. They're completely not understanding what investing is. And if you can really imagine what you really want out of life, what most people want out of life, is to not be in the rat race, what Robert Kiyosaki calls get out of the rat race. If you have enough income coming in every month to pay all your bills and give you some spending money, and especially if you don't have to pay taxes on that money, and you have a stable balance sheet that is producing that income, that gives you net worth to fall back on, but you're not living off your net worth, you're living off the income, that's true wealth. Real estate is arguably the best vehicle to create that kind of wealth. And when you see these speculative bubbles forming and people are like, why would I ever want to do that when I can buy Bitcoin at 25,000, it'll go to 50,000. Well, because Bitcoin can go from 50,000 to 5,000 because there's nothing underneath it other than the next guy willing to pay. Whereas rental property is about providing a customer, a tenant, something that they need month in and month out, shelter for a percentage of their income, which they also need and go to work at. And that's what you talked about, Robert, is accumulating the efforts of others. When you understand how to think about it the right way and understand what it is you're building, I'm not saying you can't do both, but this is really the main thing.
You mentioned Robert Kiyosaki, his unbelievable best-selling book, Rich Dad, Poor Dad. Chapter 1 is The Rich Don't Work for Money. And that's hard to get your mind around. It's, wait a minute, how did you get rich? You were working for money. Well, no, that's not what the wealthy do. There are people that you might consider rich that get up every day and go to work, and sometimes they're on a treadmill and they have to. And if they stopped, all their income would stop. Those are not the real estate investors. What the rich don't work for money means is that they don't rely on their time to create all the income that they need. Instead, they let their money and their assets work for them. And that's a discussion about equity. So, no investor left behind. Equity is one of our favorite words. It's the part of the property that belongs to you. If you bought a property for $100,000 and somehow got a $100,000 loan on it, maybe you have VA eligibility or something, there is no equity. But as soon as that house is worth $200,000 and your loan's now $80 because you paid it down, you now have $120,000 worth of equity. But equity isn't something to liquidate and spend. I think that's the big point you're trying to drive home, Russ. Equity is a tool. It's a financial tool, and it can create all kinds of amazing things if you learn how to manage it. Now, that's a discussion for another day, but the bottom line here is that wealthy people across the world for hundreds and thousands of years have either made their money or held their wealth in real estate.
Yeah, I mean, it's the essence of wealth. If you think about it, the land barons of way back, the things that people need are a place to live, food to eat, minerals and things that come out of the ground. It's all real estate. We live on the earth. Real estate is the earth. And if you can own a piece of that, it's limited in supply, although it's real big and there's still plenty for everybody. And it tends to become more valuable over time if you've chosen a location that more people rather than less would prefer to be in because of things like weather and economy and productivity of the land and, location and proximity to other centers. I mean, that's just real estate investing 101. But again, coming back to this notion that equity is not really something to be consumed. It's the goose that lays the golden eggs. And when you get into the business of devouring your seed corn, you don't have a next season. When you get into the business of eating your equity, then you are moving backwards. And so a lot of people pay attention to their cash flow and are trying to make the payments. And they think that if they can manage to do that, it's all good. But what they're not looking at is the drawdown on their balance sheet. You don't see the growth of debt or the decrease in equity. So you manage equity for stability and income, you live off the income, and then you try to produce yields, net after-tax yields that are higher than inflation and higher than, what you need to live on. And that's where you build real wealth.
Well, the secret to building long-term wealth is time. If you only have an 18-month time horizon, there's not a lot you can do in terms of building equity in real estate. But if you have 10, 20, 30, 40 years, oh my gosh. So today we're talking about the young people in your life, or if that's you, getting in right and getting in early so that you can reap those profits for years to come. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hear ye, hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, the editor of the Gold newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hello, this is Dave Lendiger, co-founder of Remax International. You're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. There's still time to get your spot on the 19th Annual Investors Summit. This year, not at sea. For 18 years, we've done it on a cruise ship, but they're not sailing, in case you didn't notice. So we're going to be in beautiful Ambergris Key, Belize, at an awesome resort, and the summit is like no other event. The Real Estate Guys do get all the details at our website at realestateguysradio.com. Click the button that says Summit. We're talking about the next generation of real estate investors. That may be you listening, it may be your kids, it may be your grandkids. But today there's probably more opportunity than ever before. Anytime we see major shifts in markets, and certainly with 2020 and now 2021, we're seeing those kinds of shifts, it creates opportunity. And I think there's also this big change. Back when you and I were growing up, Russ, the American dream was to own your home. And you alluded to this earlier, but today that's not the American dream. And there's lots of folks that find it's better to rent for a variety of reasons, but it's also good to be the person renting out the rooms. So we see young people today that are buying a fourplex or an apartment building or a single family house to rent out, and they're renters themselves. So don't think that you have to buy a home, although that is an excellent way, and loans are great, and deductibility and all those kinds of things. But you don't just think because I can't qualify means I can't get involved in real estate.
Well, when you're young and you're still trying to figure out where you want to live and how you want to live and what your life is going to look like, spouse, family, dog, cars, hobbies, whatever, the flexibility of not owning is actually pretty good. And you don't have those big unexpected personal expenses. And you end up in many markets being able to get more house for the money simply by being a tenant. The downside, and I've experienced this myself in my life, is every once in a while you end up renting a very nice home that was somebody else's home, and they became a reluctant landlord, and then or a temporary landlord, and then they decide that they want to sell the house, or they want to move back in, or they want their children to move back in, and they're not committed to being a landlord long term, and then you have to go find another place to live. So when you're looking for that stability, and you've kind of got some of those basic things in life figured out, owning a home can make a lot of sense. Maybe not so much in the short term based on what you have to pay in terms of maintenance, taxes, principal and interest, on your loan and all of that. But in terms of the stability, the ability to configure it the way you want, and what's going to happen to you over the long term, which you alluded to, Robert, which is, equity. Equity happens as a byproduct of inflation. It's no secret that the Federal Reserve, who prints the currency, is dedicated, in fact, devoted to manufacturing any way, shape, or form 2% inflation. And as we're finding out right now in this particular season in the economic cycle, a disproportionate amount of the new money that gets printed ends up in real estate. When we had 2008 and the real estate market kind of imploded because the debt markets imploded, the Federal Reserve and pretty much everybody, the government and all of the banking institutions, everybody was trying to find a way to save real estate and pump it all back up again. And people who got in back then, the last 10, 12 years, have had a great, great ride. Now we're on the other side of that cycle, and you could make the argument in some markets that real estate is overvalued. It's hard to find deals that make sense. If you can find one, absolutely do it. Lock in those cheap interest rates. But the point is there's a lot of, equity out there, and that's what happens to you over time. Because of the way the system works. And, sometimes it takes 5 years, sometimes it takes 10 years. There are ways to force equity. You can buy the ugly duckling house in a nice neighborhood and live in it yourself, get owner-occupied financing and fix it up. And that's a great way for a young person or an older person, to partner. Maybe you're someone who wouldn't want to do that work, but you would be willing to invest in a young person who is willing to get the loan and do the work. And you can do the deal together and force equity instead of waiting for the market to passively give it to you because of inflation and rising wages, perhaps falling interest rates. That's kind of the combination. plus the path of progress. But you literally just go in, if nothing in the externals change, if everything stays static, and you just take the ugly duckling house and make it the pride of the neighborhood, you're going to create some equity by doing that. So there are ways to do it in any market, because there are always dilapidated properties in any market, in any cycle, even when prices are at a high.
Well, I have a thought there, but I also don't want to leave this behind, which is sometimes the reason to rent is that your job or your university is tied to a marketplace that it makes no represents to buy in. And that would be a market where the rent doesn't support any kind of a return. So it's a terrible place to be a landlord, but there are always landlords, some of them reluctant, some not. So there it makes sense to pay rent, right? Because you're getting the better end of the deal. But I think the point that you were talking about, Russ, is one that we want to address head on, which is young people have a lot going for them. They have enthusiasm, they have capacity to learn, they have the ability to get into relationships. What they often don't have are the same resources that they will have when they're older and wealthier. And so how can you bring tomorrow into today? There's a lot of ways to do that. To buy a home today, you pretty much need 20% down. There's a lot of rental areas where the people that rent have rented for 10 or 20 years because they just can never seem to put 20% together in a pile and qualify for a loan. And nothing wrong with those folks. We love those folks. A lot of them are our tenants. But what do you have to work with? So I think this might be a time to bring up the 7 essential investor resources. You've probably heard us talk about this, but we'll go quickly through them. 4 of them are financial, and those you're going to have to reckon with, and the other 4 are not. So Russ, hit the 4 financial essential resources.
Yeah, it's cash, cash flow, equity, and credit. And when you start out, hopefully you have a virgin credit score that you haven't ruined. First thing a young person needs to do is be very attentive to their credit score. The next thing you do is you get a job, so you have income, and you can marry income to a credit score and get a mortgage, and a mortgage will provide most of the money that you need. And then cash you have to come up with by consuming less than you earn and saving. Now, you don't necessarily have to use your own savings. You can partner with people that have savings, and this is where parents and children can get involved. And often parents or older people have idle equity on their balance sheet, and they can arbitrage. They can take a little bit of equity out of property A at a very inexpensive rate, and then turn around and invest it in property B and get something maybe a little bit above that rate. So they make a positive spread. They diversify their equity from one market, one property to another, and they create a new opportunity for that young person they're working with, often their child or a niece or nephew or a family friend or whatever. I mean, I've been on both ends of this type of a situation, and it's a real win-win. I know, Robert, when you and your dad were practicing real estate together way back in the day, equity sharing was actually one of the things that you taught people to do. And it's one of the best ways for young and old people to do something together that is in both their best interest if it's structured properly.
Well, in fact, we would talk to a lot of parents who had young people, and they would love to find a way to help, but not give them a handout. And this is typically a theme when we talk about the younger generation, is not a handout, but a hand up. How do you help them? Well, you get into a contract to purchase real estate, and equity sharing can be as formal as informal as necessary. But the idea is one party puts up the majority of the down payment, maybe even qualifies for the loan, and the other party lives in the property, makes all the payments, and does the elbow grease work as it becomes necessary, takes care of everything, utilities and maintenance and the like. And then at some point in the future, when they sell the home, they split the results. So the folks that put up the money in the credit get something, the folks that lived in the property get something. Typically, whoever lived in the house gets first right of refusal if they then have the financial ability to buy the house. But it's just a way, and it's an illustration of how you don't have to have everything you need. So cash flow, equity, and credit. You may not have any equity yet. You may not have any cash flow yet. You have that credit score, which is important. We see, unfortunately, some young people don't do very well with their first credit card, and all of a sudden they've got a blemish on their credit that takes years to get rid of. So if you haven't messed up your credit, don't. That's very important. And then cash. Well, I can go find cash, I can save cash, I can live below my means, and those are all good things, but that could be a slow path to wealth. So if instead you figure out how to partner with someone who has what you don't, well, that can be a great way to go. So that brings up the other 3 of the essential resources, and that is time, talent, and relationship. So most young people, maybe they have more time than they have more money. They have a chance to go out and do the work necessary to find a deal and to bird dog around and get in relationships and look at neighborhoods and go look at properties. Why the other party with the cash and the credit can't be bothered with all that. So certainly time is one. But what about talent? There's so many things that young people can do, things they've been trained for, things they've just been around, things they intuitively understand, that sometimes older people with money could use help with.
Yeah, well, and this is where a young person can take their limited resources and invest in themselves. It doesn't cost a lot of money unless you get sold one of those high-priced training programs, but it really doesn't cost a lot of money to learn how to do real estate. A lot of it you can get from your providers. One of your most important tools is just understanding the mortgage side of things, because that's a big part of what the younger person often is bringing to the table. So you get involved with a mortgage professional and you have them kind of coach you along in managing your credit score and preparing your credit files so that you're ready to go. And the more you understand about financing and financing options, that's a skill set. That's something that you bring to the party. You may be somebody that's handy. You may have grown up in the trades, or maybe know somebody who's in the trades, which, goes over to the relationship side of things. But if you have some of those skills, or maybe you're really organized, a good project manager, you may have things in your background that you've learned in life, but whether you have them or you can identify them as skills you want to acquire, you can begin to invest in that the same as you do when you're in college. If you're in college, you want to be a doctor, what are you doing? You're acquiring a talent, you're acquiring skills that you can then go out and market in a trading time for dollars atmosphere. Here we're talking about really sweat equity and making a contribution to something. And then, of course, the relationship side is super important. And that is maybe looking through all the people that you already have relationships with friends and family that you've met over the years, and then looking through those relationships to the relationships they have. This is one of the secrets a lot of people just fail to pay attention to at any age. I mean, I just am very fortunate. I learned it early in life. When I look at somebody, I look right through them and see all of the people they're connected to. And that is a package. And so the more relationships you get into, smart people will look at you the same way. And so you can bring a lot of relationships to the table. And where do you get those relationships? By putting yourself in these environments where you're learning, where you need to be anyway, but not just looking at the people beside you as just that person beside you, but looking at them as a source of a whole new set of relationships, valuable relationships that you can tap into by developing a relationship with that person. And so that is a great way to build something very, very, very valuable in your resume that you bring to any business transaction that you do, that I just think a lot of young people don't pay attention to until later in life. Start early and start acquiring those relationships early in life, and you'll have many, many chips to trade with in the marketplace later on.
Real estate is a relationship business. At the end of the day, people don't want to hear that. They want to hear that it's a financial analysis business, or that it's a market and neighborhood business, or that it's a vendor-based business. It's not. It's a relationship business, and you will be successful in direct proportion to the number of quality relationships that you have. And so that's everything from your property managers and lenders and brokers to the people that find and source deals for you. Some of the very best deals I've ever been involved with, I was the only person shown. And that's because of a relationship. And you don't start there. It takes time to build up relationships. People marvel at the folks that we're affiliated with, and the guests that we have, and the people that show up to our events, and just the faculty we put together for our events. And these are all really important relationships that we have carefully built over time. And it takes time. You don't just jump into a relationship and everything go well. There's a lot of snake oil out there. So I would say one of the biggest things for young people to understand is this, that it is a relationship business, and the right relationship can make you, but the wrong relationship can break you.
Absolutely. I mean, think about it in anything. I mean, in high school, in college, there's cliques, there's niches, there's pet teachers and teachers' pets and things like that. And it's just the same out in the business world. It's just, it can be a little bit more complicated, and people are more sophisticated. You can't play simple games, if you will, and you don't want to. You want to be sincere. You want to be authentic. You want to keep your word. You want to deliver on your promise. You want to add value. A lot of times what a young person brings to the party is just their hustle. And the other thing, and this is another thing that I can't use it anymore because I'm an old man, but man, when I was young, I had so many older people just like me because I was an eager to learn puppy. And they would take me under their wing. They would nurture me. They would coach me. They would share with me the things they wish they knew when I was their age. They were so excited and happy for my potential. In some ways, living even vicariously through me. But I was adding value to their lives because I let them do that. And later in life, I had younger people that I did the same thing. I spent a lot of time with young people, and I would live vicariously through their life. It was fun. It made me feel young again. I realized how much I'd learned over the decades and how much I could help them. there's a lot of things that are non-financial that kind of fit into that relationship category. So you could make the argument of those 7 essential resources, cash flow, equity, and credit, which are financial, that often we think are the things that are limiting us or the hardest to come by when we're young. And really, you can replace all of those and just get along with time, talent, and relationships. And if you really emphasize the relationship side of things, you'll be amazed at how far and how fast you can go if you really focus on that side of things.
We're talking about the next generation of real estate investors. We're going to have some shortcuts, some hacks, if you will, for how you can get there a lot quicker. And let's face it, more sooner is better. When we come back, we'll also play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from April 16th to 19th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now. And with the Belize airport open again, our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful. And wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown. And with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me April 16th through 19th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market seems interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, April 16th through 19th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events, and I look forward to seeing you in beautiful Belize.
This is Gary Johnson, and I'm here to say, listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Tell a friend about the Real Estate Guys, available on all your favorite podcast outlets. We're talking today about the opportunity for young folks, a next generation of real estate investors, if you will. It's not going to happen by itself. So if you're younger and you want to put together a plan, we'd love to help you do that. That's what we're talking about today. Before we get back to that discussion, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. Just a minute, when I ask you the question, you're going to quickly come up with the answer and send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. You want to give us your name, the answer to the question, and your mailing address, because if you're the first person with the right answer, you're going to get an awesome book called Success Habits of Super Achievers. It's a collection of awe-inspiring stories from lots of people, many famous, many not yet. That can be yours if you know today's real estate trivia question. Last week, we were talking with Steve Olson about the sweet spot of fourplex investing. We asked this: name the state tree of Utah. Well, believe it or not, the state tree of Utah is the Colorado blue spruce. Yeah, I mean, of all the tree names you could pick, let's pick one named after another state. But hey, Utah, there you go. The Colorado blue spruce. Here's our real estate trivia question for this week. We're talking about young people. Russ, you remember the show 8 is Enough, right?
I do.
8 is Enough was a television show that started in the late 70s. It was about a family that had 8 children and all the craziness that happens when you have 8 children. Russ only has 6 children, so he's not quite as crazy as those that have 8. But that was the premise of the show, and it was a lot of fun. It took place mythically in Sacramento, California. But that's not the real estate trivia question. The real estate trivia question is, in what city was the actual house used in the show 8 is Enough actually located? Now, that house does not exist today. It was torn down some years ago, and a new house sits there instead. But what city was the house from 8 is Enough located in? If you know or just want to guess, it's pretty easy to guess. Send your best guess to trivia@realestateguysradio.com. Give us your name, your guess, and your mailing address so that if you're the winner, we can send you Success Habits of Super Achievers. That's today's real estate trivia question. We're talking about integrating young folks into real estate investing. We love when people come to our events that are just getting started. In fact, one of the most popular questions we get for Ask the Guys is, how do I get started in real estate? I'm young and I don't have much money. Well, as we've talked about, you don't have to have a lot of money, but you do have to have a plan. And I think that's the most important thing, is not just figuring, well, one day I'll invest or someday someone will come along and teach me. You have to develop a plan to become a real estate investor.
Yeah, again, to me, it starts with your credit score and documentable income and working very closely with a mortgage professional that can make sure you're lendable. That's number one. And then number two is really focusing in, as we mentioned, on those relationships and understanding that once you've done that, and one of your most important relationships are going to be your mentors. Having mentors. Now, these don't necessarily have to be people you pay. In fact, I would make the argument probably when you're young, the best mentors are going to be people that are doing it because they have a heart for young people, maybe because they see you as a potential investment partner. Maybe they're doing it as a favor to someone that they have a business relationship with, somebody that you're bringing to the party that they want to have a relationship with. Use whatever you have. It's okay. Just don't use people. Don't use people. Add value. Make sure everybody at the table is getting something that they came for and understand the full palette. One of the things that we learned, a group of investors were on our summit one year, and Robert Kiyosaki was explaining to these people, happen to be syndicators, all very mature, sophisticated, successful business people and investors. But he was chastising them a little bit. And he goes, look, don't come sell somebody like me with what you're interested in. I'm already rich. My problems are different than your problem. You're trying to figure out how to make your first 5 or 10 million. I've got tens of millions, hundreds of millions of dollars. I have a different problem. And so the point that he was making, in his case was practical, which is I have a tax problem, you don't. Lead was showing how the investment is going to solve my problem. And that's really the same thing, except now in this case, you're maybe not leading with an investment. Lead with how a relationship with you is going to solve their problem. I joke all the time, pity the child that shows up at my doorstep trying to sell me anything, magazines, cookies, whatever, They knock on the door with the typical, I'm trying to win a trip to Hawaii, do you want to buy? No, I don't. Are you going to take me? Right? I'm hard on the kid because life does not reward you for going out and leading with your need. Tell me, what am I going to get? Tell me how great the magazine is, how much enjoyment I'm going to get, how much I'm going to learn. Lead with what's in it for me. And then the cherry on top is, oh, by the way, when you do this and get all this value yourself, you actually do something good for the world. Me, I get to go to Hawaii, and then I'm going to share this information with other people. The point is, people of means, and those are the people you want mentoring you, are way past needing you to make money. They have money. They need you for something else, and that is to be significant. That is to make a contribution, to give back. And they can do it twofold. One is by helping you, and your success literally becomes their reward. What a great deal that is, right? If I'm a young person and I can find an older mentor who is going to get thrilled by seeing me be successful, and all I have to do is go be successful, which is what I want anyway, I'm doing the same thing I would be doing, but it's the attitude I do it with, that I'm doing it to reward them for investing in me. And then also with the idea that somewhere when I make it, I'm going to turn around and give back too. And I think older people, successful people, at least the right ones, really enjoy that. The level of participation we get from the faculty and some of the older investors on the Summit at Sea, and donating to the scholarship fund and seeing young people have a chance to be a part of the summit, they're not expecting a financial return on that investment. They may or may not even see the seed that they've planted and how it will actually develop over the years. But they have a belief that if they will invest in a young person, an ambitious young person who's in the right environment and shows up the right way, that's actually going to do something good for the world. And that's important to them. And so young people, I'm just saying, understand this is the way older folks are wired. Many of them are. And use that to your advantage without using the person. Give them what they want. Be successful.
About a year ago, we had an interview with one of my mentors, Dr. Dennis Waitley. And one of the things he's been fond of saying, and he's just written it in a recent letter that's impactful, is that at his age, he's planting shade trees under which he will never sit. But that's not why he's planting them. He's planning them for the future. And I think this gets into the heart of what a mentor is and what they do. And since we have young and old listening, it may be that it's time for you to be a mentor. If you have had experience and there are some mistakes you could correct before they happen in young people, that could be a reason to drive. Maybe there is someone in your life that you want to have a positive effect on. And so think about how you could be a mentor. How can you save anguish and some trouble from folks, not eliminating the risk, not having them not make mistakes because we learn from mistakes, but how could you show guidance? How could you be a mentor? And if you're a young person, you want to selectively look for mentors and you think strategically about what can you offer that person. Sometimes it's altruistic, as Russ said, but not always. Russ and I met at an event I used to do called Jumpstart Your Real Estate Business, which was to show brand new real estate agents how they could be Rookie of the Year in their first year of real estate. And one of the ideas that was given to me by a mentor that I always passed along was take a top producing agent to lunch. They got to eat and they're busy, so just take them to lunch and ask them, if you were me and you were starting out, what would you do? Now, sometimes that works, but another thing that works with a top producing agent is they generally have more listings than they can service. So if you say, hey, I'd be happy to go over and hold an open house for you, it's your listing. If it sells, you're going to get paid, not me, but that's a way I can help you. In exchange for that, they're going to have a way to help you, coach you and give you some ideas and give you some of those shortcuts. Our motto is education for effective action. But what we really love to do with the real estate guys is collapse time frames. And a mentor can do that for you. They can say, listen, this took me 10 years to learn this. Let me explain it to you in the next 2 weeks.
What's interesting about that story you tell, Robert, is that I'm actually older than you, not by much, but by a year. And yet at that time, I was brand new in my mortgage business. So I was transitioning from corporate sales into the mortgage business, and I was 40 years old and or maybe 41. And so from that regard, you were quite a bit older than me in business because you'd been in the space for a long time. I literally took the advice that you gave. What you just said, I did. I took 2 top producing real estate agents out to lunch, and I asked them specifically about how to position my mortgage company to win business. And I told them, I'm not going to ask for your business. That's not the purpose of this. Although one of them was saying, just kept telling me at the end, ask for the order, ask for the order. That was one of his advice. He was almost begging me, but I didn't do it. And then the other thing is then I ended up holding open houses with your dad and got into a relationship with you guys partially because I was doing that and I was spending time. Everything you said, I did. So, we're talking like young people. We're talking, maybe you feel like, oh, okay, this show's for somebody who's 20, 25 years old. But whether you are starting out or starting over, which is what I was doing, I was starting out in a brand new career. So even though I was 40 years old, I was really like a 25-year-old in terms of my career. And I took that advice just like I was a young person and did exactly what you said. And lo and behold, it worked.
We're talking about the next generation of real estate investors, new or old. We've got more to share. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a UBIT time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill UBIT, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, this is John Asraf, and you are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning in today. If you've ever wanted to do bigger deals using other people's money or invest alongside folks doing those big deals, come on out to the Secrets of Successful Syndication. We do this event twice a year. In 2020, both of them were virtual. Right around the corner is our first live syndication event in quite some time. We've got nearly 200 people signed up, but there's room for you. Come to Dallas, Texas, and learn how to put together deals. You can get all the information about this event at our website, realestateguysradio.com. Under events, we're talking about the next generation of real estate investors, and let's face it, real estate as an industry will be better if more young people get involved, get educated, get around the right people. And I think in our final segment today, let's talk about some of the practical things you can do. And I think one is there are awesome books that have been written about the subject of real estate. When someone has spent 10 or 20 or 30 years in an industry and has written the very best morsels, and you can pick that up for $20 and read it in 3 days, why wouldn't you do that? So readers are leaders. Make sure you're reading about real estate. And then we're big proponents of live events. You can learn a lot on a virtual event, but super hard to develop meaningful conversations and relationships. Oh yeah, there's all that faux networking that happens on virtual events, but rarely do folks make the connection they do when they are in person. So if you're up to it, there's a lot of places you can go to learn about real estate. Now, you can go to the free meetup, and that's a way to meet some people that are interested in real estate. But I'll tell you, if you go to the $300 or $500 seminar, now you're going to meet the serious people.
Yeah, I mean, it goes with anything. When my son was playing football as a young child, and he had a choice between going to a team that was not well positioned to win a national championship, Pop Warner National Championship, but he knew the coaches and he was well established. He felt like he'd get playing time. And then he had a chance to go with a team that the two best players on his team, and he was the third one, could go to, and he would be really challenged, and he was going to be late, and he was going to have to work his way onto the roster, but they were favored to win the national championship. And I asked him, I said, what's your goal? He goes, well, I want to play in the NFL. I go, when you play in the NFL, who are you playing with, the best or the worst? He goes, the best. I go, then when does that start, right? How big of a room do you want to be in? I'm just a big proponent, whatever level you're at, whatever station you're at in life, whatever opportunity you have to get in a bigger room, take it. Get in that room. Find a way to get in that room. And, don't wax smart. Just be humble. Stay, ask questions. Do a lot of listening. When you learn something that you think you really can add some value, if somebody asks you a question, give them an honest answer. But don't try to be authoritative about it. Don't try to parrot something you heard from somebody else and pretend you're smart when you really don't understand it. Just say, well, it's my understanding, or, what I heard was this. What do you think? And flip it back to them and let them talk more. And if you use those little techniques in conversations, you will fit into the room. You don't have to be afraid. You will learn a ton. And when you do open your mouth, you won't look stupid. You will look exactly how you need to look as somebody young who's eager to learn. And mentors gravitate towards people like that.
We're just talking about our syndication event, and average age for someone who attends that is in their early 40s. We get people in their 60s and 70s, and we do get some young folks. But I'll tell you what, when there's a young person in the room, not only do we pay attention, but the faculty pays attention. I mean, we soak it up. And so when you show up to a free seminar that didn't cost anything, you look around the room, and what does everyone have in common? They don't have any money either, right? That's not probably the group you want to be in. I'm not saying you don't want to go check things out. You certainly do. Know that if you're going to go to a free seminar, you're going to get sold something. That's how it works. Now, you can come to one of our events and pay some money, and you're still going to get sold something. We don't have a big run to the back of the room pitch ever, but you're going to get invited to other events, which is how you become part of the Real Estate Guys tribe. And I am so thankful that we have a bunch of young people as part of our tribe. How do you do that? Well, we're intentional about it. We've got a lot of folks who are in their 40s and 50s that have hung around with us for a lot of years and have now entrusted their children with us, which is the best compliment we could possibly get. But we also do things like our young adult program on the Investor Summit. Once a year, we do our Investor Summit, the biggest event the Real Estate Guys do, and it's super intense and super expensive. And one of the challenges is when you have nothing but high-performing, accredited, super wealthy people sharing great ideas, you get awesome stuff. But there's not a lot of young people there to share. And a few years back, we started our young adult program, which is a way for folks that are between the ages of 18 and 25 to attend at a much reduced rate. In fact, the rate is lower than cost. But we're able to do that because of exactly what we've been talking about. We've got a number of our summiteers, folks that have been to the summit for many years, who put together a scholarship fund, and they make sure that money isn't what's going to hold somebody back. And so if you know somebody who's between 18 and 25 and has an interest in real estate, or if you are that person, well, then you ought to think about coming to the Investor Summit this year.
Yeah, it's a big room. And, the first time we did it, we had Robert Kiyosaki and Simon Black, and they were so enamored of the young people, just impromptu. They said, hey, we'd like to do a breakout. They took an entire lunch break and just locked the door, and it was just all the young folks with Robert and Simon. And they spent that whole time with him. And then that kept Simon coming back. I think he came back 3 consecutive times after that, came on 4 consecutive summits. And every time the pull for him was he wanted to be around the young people. We had Chris Martinson and Adam Taggart from Peak Prosperity do a breakout one year with a group of folks. Kim Kiyosaki did it. And that's my whole point. This is what happens. It adds a lot of value to our program when young people are there because it gives the older folks, the established folks, something they really get excited about. And at the same time, it's a wonderful, wonderful opportunity. Talk about being in a big room. Can you imagine just hanging out with a group of 20 people for an hour with Robert Kiyosaki and Peter Schiff and these different people? I mean, it's amazing. So, every year the faculty changes up a little bit. And we know we got Peter coming. We got Tommy Hopkins coming, who was my sales mentor when I was in my early 20s, just trying to figure out which way is up. And I owe him my career. I have so much gratitude for that man because of the things he taught me. The other part of it is not just the headline faculty that you meet, but it's all of these very accomplished investors and syndicators, people that have done well in business, that have made a lot of money. And they may not be best-selling authors or, new media personalities or financial pundits you see on TV, but they're very, very successful. And, maybe you didn't grow up in a home that was that way and you want to change your life. Well, this is a great way to get around some folks that look at life maybe a little bit differently than what you're accustomed to. So again, any opportunity you have to get in a big room, take it. This is an opportunity that you have. You got to have some skin in the game, right? We don't give full rides to anybody. You got to pay your travel and put a little bit towards it just so you have some skin in the game. But it doesn't have to be cost prohibitive. If you've got a little bit of money put together, you can find somebody to sponsor you for the balance, then it's definitely achievable. And it's a great, great time.
You get all the details on our website at realestateguysradio.com and click the button that says Summit. You'll learn all about the Investor Summit. Parents, if you want to bring your young adults, that could be an awesome way to do it as well. So I think the message today is that the future is the young people. That's just how it works. And so if you've got young people in your life, if you are a young person, now is the time. Don't wait. You won't be glad you waited. Be the person that says, I'm glad I did, instead of I wish I would have. Next week on the Real Estate Guys, it's Ask the Guys. If you've got a question for the Real Estate Guys, just go to the website at realestateguysradio.com. Hit the button that says Ask the Guys. It becomes really simple from there. We'll take a look at all those questions and answer a bunch of them next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.